And a very good afternoon here on Friday, the 22nd of February 2019. My name is Rishi Patel, co-founder, Master the Markets, the Elite Traders Conference, and the Traders Open Day. And a very warm welcome into our weekly market roundup here at Master the Markets, which we always conduct at the end of every week to report in on the trades, either profit or loss. Here at Master the Markets, complete transparency is the core, and so we are accountable to our community in every way. So this week I want to talk a little bit about the topic of the week is spreads. It's a very relevant topic to this week's trading, and you're going to see why very shortly. But let's just do a quick review on the lift-off strategy here. We currently have a pending trade on the Euro US dollar at this time. The Euro Japanese yen, we have a pending order on at this time. The pound US dollar, we had a pending order, but we've cancelled it. And I'm going to be doing a review on why that is a little later today. If we go to the money bars, no new trades on money bars this week. As well, just there, so no profit and loss, i.e. there. Nothing on the cash-in strategy as well. The gold bar strategy has been given some momentum this week, and if we look at the system trades for gold bars, you can see this week we've got the 21st of February and 22nd. There you've got a minus 0.27% on the beta gold bars strategy, so minus 0.27 just there on that Aussie dollar and the GBP USD. Beta trades we've mentioned already in the live trading room. We are not counting them towards the system performance at this time, so we're not counting those at the moment into the cash and system curve. We are just literally beta testing these strategies, and hence we are pushing the signals out, but it's more so we can collate the real market performance on the ground as it's happening. So this is the beta strategy is up 1.01% system here for the 5 trades we've taken so far on beta, but we're not counting this towards the cash and the system curve at the moment. So on the live trading room, as you know, we have 2 trading rooms, the live trading room and then the Vedanta Elite trading room. There's no profit and loss at this time. Currently we are running 1 trade on the Elite room, which is on the pound against the US dollar, and that is on the gold bars, so that's live just there. We are running that. Nothing on the smart money strategy this week at this time. Same thing with the counter trend, swing profits, prime profits. So it is a flat week for us. There were some opportunities, they didn't trigger. We're going to talk about that shortly, but it is a flat week for us here at Master the Markets. No new opportunities, no profit or loss, which takes me then straight into the topic for the week. Before the topic of the week, let's do a quick market roundup for the world markets. Let's go over some commodities as well, including gold, oil, the major indices. Let's look at Bitcoin. The Euro US dollar continues to proceed in a downward trend at this time. So you can see we did have a primary setup just here on this market on the euro dollar. We didn't take it as a lift-off opportunity because it didn't have the English channel set up, so nothing for us this week, but this does continue to proceed in a downward trend. Pound dollar is also in an upward trend at the moment, and we are looking for various opportunities. I'm just conscious that there is a gap here that hasn't yet been filled by a half pip, so the market may look to go ahead and fill that gap. Let's see what happens into today. We'll know for sure over the next few days whether the market does decide to fill that gap or not. The dollar Swiss franc, again, a nice clean clear upward trend just here. We're looking for a cash in setup potentially, so let's be on the lookout for that. May set up into today. Continuation of the trend, that move would be. Here's the Aussie dollar. We actually had a beta trade on gold bars, which actually would have hit its profit target on this yellow line just perfectly before the whole market reversed, but we took the trade off on the close due to the rules that are built just there on the close there. So we still ended up with a 0.77% profit, but we didn't hold the trade towards that target, and then it reversed. So it was a perfect target that we had in place there, and that means there's definitely an element of skill in the strategies, target setting rules to get that close to the target, to hit the target, in fact, and then reverse his ideal on the Aussie dollar. Dollar Japanese yen continues to proceed in an upward trend. We do have a primary here, which is an important note to take. There's an accumulation here as well. Believe that we'll see some yen strength in the market over the next coming weeks, so be on the lookout for that. The gold market is continuing to proceed higher. We're seeing a nice clear upward trend on the gold market, so there are opportunities definitely here to trade the market long. And some of you that understand the lift-off strategy would be able to take advantage of this, even if it's not with the lift-off strategy, even if it's with the cash-in strategy. There's definitely opportunities setting up here, so you can be on the lookout for that. Oil, again, is in an upward trend, has broken the last swing high, continues to trend higher. The UK FTSE 100 also recovering some of the losses that have been made as well, since its big move lower over the last couple of months. You can see if we look at a Fibonacci of the last most highest point just there, we're back at 50%. Just there, so it's an interesting move, so we may see a move lower now as well. Again, this weekly could set up for a potential lift-off opportunity as well. Same with the UK 500. Bitcoin also very interesting as well. This is a potential low for Bitcoin. This could represent a good investing opportunity at this stage. It doesn't look like the market has the momentum to go much lower and has been downtrending for a long time now. How do you determine a buy opportunity on this? You just need to assess the different time frames using the smart money indicator or any other swing high, swing low indicator, which yields a great open equity. The smart money indicator we've come across is the best with open equity that we have published. So nothing happening for us on the world markets in terms of trade opportunities, but definitely interesting things to look out. We can see some trends are persevering. So I want to go back to the pound US dollar, if I may, and just talk about a trade this week that we did miss on the lift-off trading strategy. When I say we missed it, it's quite an interesting one, because technically, according to the system, it would never have triggered. But if we had placed it cash, it would have triggered. And this has all come down to spreads. So this week's topic is all about spreads, and I want to teach this topic. It's a great reminder for the whole community here at Master Markets, even the elite traders that we have on the Vedanta Elite Trading Team. Because understanding spreads and reminding ourselves of spreads will help us, of course, to eliminate mistakes like this in the future, which even myself, as a professional 10 years in, occasionally from time to time still make, and you can see that this has happened this week. And as I said, I want to talk about this transparently, because this is a great community for us. It's about accountability, and we're accountable to you. So if we're missing trades, we want you to know about it and hold us accountable to this as well. Doesn't happen very often, admittedly. Normally our cash and our system curves are super tight. Even in this case, it's not a system trade, but it would have triggered on cash. It would have taken our cash curve above our system curve, so it would have been a nice to have. But in any case, let's review what we should have done and where we should be. First of all, we need to understand spreads. So spreads are basically one out of many of the ways that the broker makes money. Okay, so it's not the only way that the broker makes money. There are many others depending on the broker. I don't want to go into all of them at this stage. It's not the purpose of this of the topic. There are two parties in every transaction. So to understand spreads, we need to understand a few things. So the first thing we need to understand is that in every single transaction, and let's take this even outside of the market for now as well. Let's take it as an example of if you go to the supermarket, right? Even if you go to the supermarket, there are two parties in the transaction. You're one of the parties that wants to buy your groceries, and the supermarket is the other party. So the supermarket wants to sell you the groceries, and you want to buy the groceries. So you need a buyer and a seller to make a transaction happen. Now this may seem obvious, but it's the core behind how spreads actually work. Okay, so you have a broker and you have a trader. So in this case, we are the traders, you're the traders, and the broker is XTB or whoever else, Saxo Bank or whoever else you're trading with just there. So we trade with Saxo Bank. They are the broker, we are the trader. So what we have to understand is this: when the broker sells, we buy. So if we click the buy button on the Eurodollar trade. So Eurodollar is currently trading at 113.19, right? So Eurodollar is currently trading at 113.19. Okay, so if we want to buy Eurodollar, then what we need to do is get the broker to sell that to us. And this is very easy because all we do is on the instant execution, we just click the buy button. It looks a little bit like this. You'll have seen it. It'll vary from broker to broker. And all we do is we click that. That's it. That's the only action we need to take. At that stage of making that action, there's a couple of things happening. The broker is selling us Eurodollar and we're buying Eurodollar. Okay, so that's what you'll see on the chart as the ask price. And then when the broker buys, so in inverse now, when the broker buys, we want to sell. So we can't sell unless the broker buys, right? You need to have two transactions in every, you need to have two parties in every transaction. You need to understand this core principle, otherwise this part won't make sense. So you cannot sell something unless the broker is willing to buy it. Okay, how the mechanics work on the ground are a little bit deeper and again outside the scope of this topic. But what we need to understand is the spread, which is this topic, is the difference between these two. So the ask price, where the trader buys at, and the bid price, where the trader sells at, the spread is the difference between the two. Now, the price that you see on the chart is always the sell price. So now if I go back to my example of Eurodollar, I said that Eurodollar is currently trading at 113.19. Okay, so 113.19 is where Eurodollar is trading, but that is the price I saw on the chart, which means that that is actually the bid. Okay, so if I wanted to actually buy Eurodollar, as I mentioned earlier, by clicking this buy button just here, if I wanted to buy Eurodollar by clicking the buy button, I wouldn't be able to buy at 113.19. I would need to buy at 113.20. The difference between these two is basically the spread, okay? And you will not see this price on the screen. You will only ever see the bid price. This is important to note, okay? Because now we're going to go over to the chart and look at that pound dollar as an example. We're going to understand where we made a slight mistake on spread this week. So spread is only charged on the buy side. That's the other thing I should say as well. Here I give you an example of buying. Now if I wanted to sell, on the other hand, if I wanted to sell Eurodollar, so I'll click the sell button, I will not have any spread added to my transaction. When I click sell, I will be able to buy at exactly 113, I'll be able to sell at exactly 113.19. There will be no spread added at the time that I press the sell button. I will get to sell where the current chart is, where that price is. There's no spread because spread is only charged on the buy side. So to get out of the transaction, I'm going to have to buy back, and so I pay my spread on the way out in a sell. On the way in, I pay my spread straight away on the buy side, and I don't pay it on the exit. So with brokers in forex trading, you're only paying spread on one side, and that's important to note as well because there are different markets that you can trade, and different brokerages have different rules. So in stocks, generally you pay spread on both sides. When you buy and you physically hold, you'll pay spread on both sides. So there is these different mechanics to note. Okay, so that's it. Let's take this over to the chart and let's actually look at a real life example. Okay, so here I am on the pound dollar, and I've got a horizontal line running at the close price of this primary bar, which was Friday. So the close price of the primary bar on Friday was 128.90. Okay, so that was the close price. So technically speaking, when we want to get into this trade, we never enter the trade on Friday because the market could gap against us. If the market gapped in our favor in this case, but if the market had gapped down lower, even below our initial stop loss, then we would have made a greater than 1% loss. We don't want to take that risk. So we always enter the market on the Sunday. We place our order on the Sunday. Or the Monday for the close of that gap, if there is one, and we get into the GBP USD transaction that way. Let us understand exactly what happened here on Sunday and where this mistake was made with regards to spread. The close price of the market on GBP USD on Friday was 128.90. Now, This is a buy opportunity. We're going long on the lift-off strategy on this particular opportunity. So let's understand what happened. If we're going long, the buy price that we would get into the market is 128.93 according to the system. Our system trading back testing has a 3 pip spread, so we always add 3 pips spread regardless of what our broker has. We add 3 pips of spread. Even though our broker has less spread, we add 3 pips. So the order we wanted to have placed here on Friday was 128.93, but unfortunately, because we forgot the spread, we opened the order, we put a buy limit order at 128.90. Okay, so we put a buy limit order at 128.90 on Monday, and even on the Sunday evening itself. The Sunday evening, let's look at the Sunday evening. On Sunday evening, the market came down. Sorry, what am I talking about? Sunday evening is this tiny little bar here, not relevant. On Monday morning, the price came down to 128.90.5. Okay, 128.90.5 is where the market came down to. Now, remember, our order was at 128.90. That was an error. It should have been at 128.93. Now, according to the system, the market would only really have come down to 128.93.5 because of the 3 pip spread, don't forget. And what you're seeing on the chart is the sell price, not the buy price. The market would have come down to 128.93 in terms of a buy price. It still wouldn't have triggered us into the trade where we needed to have got in. So the system would not have entered. But because our broker has, we trade with Saxo Bank, we have a 1.1 pip spread on the pound dollar. This would have entered us into the trade if we had placed our order at 128.93. Unfortunately, because we've made a mistake not adding the spread and placing the order at 128.90, we missed this move that then followed just here. At this time, we'd have locked in at least a 0.5% profit on this trade, which we could have added to our cash curve on the live trading room. The system, remember, wouldn't have taken it. So our system wouldn't have taken it, but the cash curve could have outbeat the system curve had we have placed this order correctly. So it's very important that when you enter buy orders, normally we're spot on in the live trading room. We call the market, we put our buy stop orders on, is normally what we use in the live trading room, and they always have the spread added on, always. Occasionally, I mean, this is one of the first times really this has happened, where we have missed the spread off of an instant execution order where we needed to have bought at market. So sometimes we do forget these when we're placing these limit orders, and it's very important to remember them. You can see the difference it makes in this trade just here. So that was the pound dollar. Not to worry, we live, we learn, we move on, we grow, we continue to evolve and get better as traders. But what I want to show you is that here, even on the ground, even with 10 years of experience, we do make mistakes from time to time. This does happen, but it's just about having that learning lesson, finding a way of creating a reminder. That's what I'm discussing with the live trading room team at the moment, how we can get better and sharper as well. So that's it from me for this today's weekly market roundup. As I said, no profit and loss this week, no closed trades, no open trades on the market this week. Some beta trades running, it's just a slight loss, but the beta trades up overall on the system just there at Master of the Markets. So that's it from me for this week. Look forward to speaking to you all very soon. Until the next time, stay disciplined, follow your trading plan, and keep trading like a master. Bye for now.